Hello guys, welcome back to my channel. In this video, I'm going to show you how to calculate risk to reward in the forex market or synthetic market per se. The knowledge of risk to reward is very, very important. Remember, before now, I've said that in forex trading, there are some things that you cannot live without. In fact, there are some things that you really need to pay close attention to, which is what? Psychology and risk management. Okay, when you talk about risk management will help you stay longer in the market, and that is why professional traders don't just trade anyhow. You know, there are some beginners who come into the market and what they're doing is they're just buying and selling, not paying attention to how much they are risking or how much they are gaining. They're just buying and selling. All they just want to say is blow ball. At the end of the day, they take the red and they become frustrated and they don't stay long in the market. So paying attention to your risk level is very, very important. And then having known what risk to reward is one of the criteria that shows that you're becoming a professional trader. So I'm taking my time to explain this concept so that you will know how to use the tool that will help you calculate your risk to reward, or how you can actually start trying or actually be able to calculate this risk to reward yourself. So what is risk to reward? Risk to reward is the distance between the entry point of a trade to the stop loss and the entry point of a trade to the take profit level. So what that means is that when you are talking about risk to reward, you are willing to know how much you are risking in the market and how much you're expecting to gain in the market. So it is very, very important that before making any entries into the trade, you ought to have known what the risk to reward of that particular trade is. So when you calculate that, you are aware of how much you're risking in the market and how much you're willing to take from the market. Okay, so it is very, very important that you pay close attention to it. If you have not been doing that, you have just been buying and selling, you should now have to reframe and start trading like the professional traders that pay close attention to their risk management level and then understand what risk to reward is. Okay, so how do we calculate this risk to reward ratio? Now, you can calculate this risk to reward ratio in two ways. There are tools that has already been put in place in the Tradingview, either in the forex market or in the synthetic Tradingview, that helps you to calculate your risk to reward ratio. Take for instance, look at the trade we have before us is on volatility 50 index. Okay, is on volatility 50 index, and you can see that this particular trade, although we have some sort of reversal from here, we have some sort of reversal from this particular region. You see, I always talked about transition. You can see that whenever a market wants to change character, in forex market we call it chalk, which is change of character. Whenever the market wants to change character, whenever the market wants to transit, like change its trend, you can see that it either comes with a sort of consolidation or a kind of double top or triple top, and then you see the next thing you want to say is a break of trend line, a break of structure, and you see the market creating a new series of, depending on the trend is changing into. For instance, the market here is changing into a bullish trend, and what you're seeing is series of higher highs and higher low. Okay, so when you see that break of structure here, and then it came to this particular region. This particular region is a significant zone, although I was expecting that market to come because this is a higher time frame resistance level. This is a higher time frame resistance level. So I was expecting that market to tap into this particular zone before I see the new reversal. But notwithstanding, as a trader, you need to be very smart to catch moves, and you have to react. You are not to act. Okay, you have to react to what the market is doing. Okay, react to what the market is doing. So I was able to spot this after this double top. Okay, the market came here. I was expecting this particular phase to, this push to break out and get to this particular, but then we have this salt, and then we have this move, which is also combined with candlestick anatomy. There's a video description on candlestick anatomy, so make sure you watch that if you have not watched it. So we have this double top. You can see how many times the market came to this particular region to test, and then I was able to create this one. But now when you click on it, you can see risk to reward of this reward is already written here. Look at this risk to reward ratio, which is 5.5. Okay, what that means is that for every $1 I am risking in this trade, I am making $5. You can see that is a crazy risk to reward. So for every $1 you're risking, you're getting $5.5. So what it means is that if I'm risking $2, I'll be making $11. If I'm risking $3, I'll be making $15.5. So that is crazy risk to reward ratio, right? So this is that about how you can use this tool to calculate. But then how do we get this tool on synthetic trading view? How do we get it? So when you come to this particular platform where you have your tools, you can click on it, and then you can look for, sorry, not here. You come to this particular place because you have here, you have this trend line button, or you have this brush, you have text, and then you come down to this particular point. So you see long and short. So this is for short is for selling position, because that is where if I want to get this, if I want to get this particular one, I have to use short. But if I'm buying, I have to use long. So if I want to get this, I can just click on it and then put on the area I want to do, and then I readjust it to where I want to make my entry from. Okay, so for instance, if I'm anticipating, mind you, if you look at this particular point, these stars are showing that I've already added this particular to my favorite. So that is why I can find them on my screen here. If you have not watched my previous video on how to set your trading view or how to use synthetic trading view, please make sure you do that. The video is there, so make sure you watch it so that you can set your own and make it look very professional like Mike. So for instance, if I'm expecting to take further entry, on this trade, I'll be targeting to take a trade from here, because this is a level. It's a level. If we break out, I'm going to take it and probably target two particular phase, which is here. So here is going to be my TP1, and I'm going to have TP2. Okay, so I'm shorting, so I'm going to target taking this trade from here, and I will have to take it down all the way to this place, and I'll put my stop loss. I'll put my stop loss here because I don't want it to be very tight, just slightly above structure. Okay, so this is about, when you look at the risk to reward, this is about 5.7 risk to reward. Okay, 5.7 risk to reward. 5.7 risk to reward. So that's how you can use this tool to calculate your risk to reward. All right, so another way you can calculate your risk to reward is by doing it manually. Okay, you can do it manually in the sense, but you calculate your stop loss and you calculate your take profit level, so that you can know how much you are risking and how much you're gaining. For instance, to calculate stop loss, depending on the pair, you calculate. There is a video on how to calculate stop loss, so make sure you watch that so that you'll be able to do this second phase. How to calculate stop loss and lot sizes. You have to know the lot size. You have to know the lot size you're using. You have to know where you are willing to put your stop loss. You have to know where you're willing to put your take profit. So when you get these three tools, these four tools, no, three, your entry point, your stop loss point, and your take profit point, and 4 parameters: entry, take profit, stop loss, and then the lot size you're willing to use. Once you get these 4 parameters, then you can actually do this the second way of calculating. But me, I prefer to use, because I'm using system to do my analysis, I prefer to use this tool if I'm using system. But if I'm not using system, if you are using phone to do that, so you can actually learn the manual way of calculating risk to reward. So thank you so much for staying to this time. Thank you for watching. Make sure you subscribe to it, because there's a lot of educational videos that will be coming on back to back. So don't make sure you don't miss out. Subscribe to it, like, comment, and stay with us. We love you guys. See you in our next video.